area exactly, you have a low price and even lower than the first entry, and you have higher momentum. So you have an extreme momentum that cannot break below the cycle translation or the cycle translation support. Okay, again here you have higher momentum on lower price, and then you have higher price on lower momentum, and both of these prices do not break the bounds at the cycle translation support. So this goes to show that momentum here has turned from bearish at the cycle translation line or the cycle translation support to bullish at the same cycle translation. So this is the trade to take. Okay, you are confirmed, you are definitely confirmed that if you buy the market, if you are there on the future bids of Chicago, and you started to buy this now, you just have to put your stop below 2.75. Doesn't matter what value you buy. Whatever value you buy, you're going up to 3 points with pivot levels. You'll see that on the next chart, you're going up say to 3.25. Okay, so every day you can go to the Chicago exchange, alright, buy copper, doesn't really matter what the price is. By the end of the day or next day it will be high, we sell it, and then you will the next day on buy. Always keep your stop at 275. And then you're even looking at the chart based on this type of analysis. Because you are confirmed a trend, you are confirmed cycle translation. This is one of the most important advantages of momentum. Okay, so if you're buying into this, what would we actually buy? We know that this is now segregated with 3 has completed. We have completed a 4 and we expect to be going up in a 5, and this is the hourly chart, I believe. Yes. First leg higher, that's the 1, 2, 3, 4. Okay. So we expect with 4 to still test the top of 1, of course. Usual Elliott cycle principles. And then that gives us that we will buy slightly above 1, because we are of course technical traders, not fundamental traders. Okay, so this is, we are, let's say, always take the least price possible. Okay, so that would be the top of 1, local high here or local 1, and that's that yellow arrow. You will of course keep, like I was saying, you need to keep the stop below wave 4. This is a dangerous stop because you could still see this is a 4E, you could still see a 4B. Alright, you could keep the stop of course right below the neckline at 2.75, but we are quite sure of more. And this is not a very volatile issue, so if the market is really going down on us, we could always move our stop lower. It doesn't make much difference. So our stop is 2.78, our entry is 3.02. We could of course consider entry between 3.02 and 2.98. Okay, so 3.02 is just right above the top of that. I was saying this is not a very volatile issue, so you would, unless there is a fundamental breakout, regardless. So you would want to be filled, so it's better to be 3.02 and 3.05, and it would take a whole week or 2 weeks to fill these entries. Your stop is okay at 2.81, you're fine, I believe, at 2.78 or 2.75, if you wish to do that. Okay, and your target is 3.23. This is right. The target of course is bid in light of the current monthly breakout pivots. Okay, that's it here, 3.23. I would expect it to go higher to 3.5, but we'll have to draw new pivots the coming month. Okay, so of course these are the levels of entry, 3.2 and 2.98 instead of 2.9656. Okay, to make up for spread, and your stop of course is 2.75 or 2.78 as shown above. Okay, alright. Our next issue is nickel. We will check on the then. We will do that right after nickel. I believe that's the next in line. There's still the same question regarding the United States dollar against the Canadian dollar. And I believe I've already covered both. Okay, so with nickel, it's a different story. Alright, we don't have cycle translation. Okay, we actually have, this is the ground cycle shown on the daily. We have a double, we have either formation or a multiple head and shoulder formation. Like we expect to see now, it shows the first right shoulder going down before it bounces at this neckline, and then we're doing the smaller shoulder, okay, and then we're going higher. What this diagram, what this chart tells us is this is actually the demand supply price cycle for nickel. Okay, when there is the issue higher prices, okay, when the issue is not so much in demand, then you get the lower prices. Alright, that's why we expect to get lower prices over the coming year until Corona pandemic no longer impacts economic activities. That is okay. So this is not going down right away. We don't believe that the right shoulder has stopped. We still have positive momentum on the daily and on the 4 hours. You see that here on the hour, we still have continuous positive momentum. So we believe we're still going to see another leg 5 higher. Alright. So there are 2 trades that we're going to do here. Alright, we would consider to go long now. We still expect to wait 5 higher, like this is, that was the 1, 2. 1, 2, 3, 4, and still have a 5. And we can only consider to go short at either one of these 2 bottoms, the bottom of wave 1 here or local wave, or the yellow wave 1 here. Okay, so we have 2 wave counts, a primary count and an alternate count. The primary count is shown as yellow, actually. Okay, and the alternate count is in white. Okay, so should reject, you have a complete 5-wave structure down. That's 1, 2, 3, 4, 5, and we would expect to reject, we could reject at 380, we could reject even higher at 400, because we could actually correct the whole wave and do a double count. Okay, this is why this is the primary count, because we'll be going long term. We're still going to buy into that. So we could use our entry to go all the way to 400 and 420, even though the fundamentals are not there. There's nothing to drive prices high, but we will give ourselves that advantage as long as we're already in the long market. Okay, or we're already in the market long. Okay, so this is the primary count. Will lead us to speculate that it's possible to even see 420 points. Okay, so the alternate count means that we are in a bear trend and we should be seeing as the right shoulder sooner than later. Okay, so we should repel, or the market should start going down at white 1 here or here. Bottom of wave 1 here or bottom of wave 1 here. That gives us about 360 or 367. We'll see that on the faded table, and around 382 termination points. We'll of course have to check on momentum to know which of these levels is the level in the making. This is what it is called. Okay, so these are the pivot levels, and we would consider to show 387. That is at the bottom of that one. Like I said, next month we'll see newer levels. We could, possible, if this is bullish, that we could ride our long all the way to 410. Okay, alright. We could of course also consider to show 366.6. That is just as below that level 1 here, or around 1 in white, the smaller 1 in white. Okay, so this is for the long term, the technical picture. Now for the short term, like it's written, swing term, long term. Swing trade will be a long term trade. We sell rejection either of either of the two wave one bottom, this one or this one. Okay, so for short term day trading, all right, we expect to be bouncing at that neckline. That neckline, I don't believe it's showing here. That's an internal. Okay, so what's the Okay, so this wave has been segregated. The current marked an uptrend. It's a very bullish wave, like you see, consistent, strong momentum. We will take, of course, the best entry the market can give us, and that will be a test of wave 1 here or wave 1 here. Okay, there is no cycle translation on that, I believe, or we've not yet tested it. So we would expect to enter longs at 300. We're buying between 338. This is actually the Dow Jones Commodity Index for nickel. I don't believe they are the true prices for the commodity itself. These are not futures. You're buying the index. Okay, so when you buy, you'll probably be charged swap. I'm not sure. Because you're being financed. Okay, so you buy 338 and 342 between these levels. I'll stop at 300. That is that point here, right below wave 2. Okay, and our primary target is 368. We'll pick that target, of course, because we expect there to be a rejection of 366. Okay, so for day traders or swing traders, unless we see strong momentum, we could then rebuy all the way to 380 and 200. We'll of course take it one step at a time, so we're only going to 368. Target here is 370. Okay. As an intraday trade, of course, this is the segregation chart of that wave. This is the hourly chart. So this hourly swing wave is segregated onto that one here, broken down into that one here. All right, and this one shows cycle translation, the 15-minute chart. So it would point us to buy exactly 352, 350. All right, this is the termination point of the current correction action in degree 5 or 3. Our stop, of course, would be 340. These are higher levels than the ones previously shown here. Here we were buying 342 and 332. Our stop is 325. This is a swing trade. It will take more time to materialize. The other one is a day trade. You could trade it on a daily basis with that. But of course, it will also have to be updated on a daily basis, I think. I gather that is. Okay. So that on a daily basis, you could buy 352, 350, okay, and you're going same target 366 or 367 right about here. Okay, stop is 340. The stop, of course, is above wave I or wave 1. Trade on a daily basis, and you have emission, okay, to raise specific equity in the month or on a daily basis. So you should enter this market. You know, of course, that this is fundamentally bullish. Okay, so you would enter this market on a daily basis and not put the stop on top. You would not put any stop or put a mental stop below 1 here and enter that high. And then you know that this is the risk is slightly higher than shown here. That's the local one, of course, wave 4. But being only in to make the money and not carry losses, you know that this is going up anyway, and your most closest and most logical prospect to get filled is that level, because this is the transition. So the market shouldn't fall below to test all the way down to 1. Okay, statistically. So you need to buy if you need to generate. If you need to generate yield, regular yield on a monthly basis, you need to buy 352 and 350. And mentally keep your stop below 1, and you're going to the same targets of 365 or 367. We can move now to our next issue. This is Euro Yen, of course. The question is on there. Let's take a look. Okay, so here we are with the Euro Yen now. All right, excellent. Now, you could trade it, swing trade it, what we are doing or what we were doing last week, right? We have currently, the market has currently done wave B. This is what we're seeing here. Okay, I believe I may have to go again over the preliminary analysis. If you wish me to go again over the preliminary analysis, please send a note in. Alright, I will just first point out where we stand, then I will redo the preliminary analysis. Okay, so like we were saying last week, we were short this issue, and we believe that we should reject at wave 1 here, okay, which is right about where the market. These levels, 124.15, 123.90, and 123.70. These levels now should have all filled because there was a correction. The euro is strong today because Lagarde was optimistic about the physical stimulus that is available for the eurozone. Okay, so what we've actually seen now is we've seen this is a 4-hour chart. And we have seen this correction complete. That is actually that is actually projected from point 2 here, wave 2 here, okay, and all the way down to 3. Okay, so that was the correction that was made where we wanted to buy 124.20 and 124 and 123.90 and 123.70. Okay, so if you've already shorted these, you would hold them. And we are going to short these all the way to this level 122, not 122.5. We remember why we were going for 122 and not 122.5, because we are actually taking profits at local point 1 here. That's very, we believe cycle-wise, we're moving from one neckline break, that was a 3, alright, that bounced that down from 5, an extension of wave 3, 38% or 27% extension of wave 3 should take us to the nearest top of 1 available. Alright, so a 5 will not move more than, hopefully, I think, or probably 38% to 27.2% or 38.2% or even 61.8%. So we'll take the logic value should be 38.2, and that should drive wave 1. This is where this neckline is drawn, and this is our target. This equates with 120. Okay, so we're now carrying this shorts, alright. This was our entry from last week. If you wish, if you did not already fill, if you wish to enter the position, you could do so right about now. Of course, you do your own due diligence. All right, our stop is 125, right above the complete structure. Right above the complete structure, so that we don't get spiked out above the head. At 125 exactly above the head. You could wish even to take that higher to stand out of volatility. All right, so that is 125 here. Okay, we'll look at that at 1 hour. Anyway, we show these, and we're going all the way down to 122. This is our primary trade. Okay, if you like, you could, I would not do that, but if you like, you could hold it all the way down to 119. Investors would do that so as not to hassle themselves, but I believe there's still going to be counter volatility at 1, and you could still re-enter shorts. Okay, so this is of course the hourly chart or the 30-minute chart, right? And these are where the levels to fill since last week. Projections here show that we should go out at 122.50, but we already corrected that. This is the trend line to take. So let's take a look now at that on the 30 minutes. That's it here, 161.8 is 122.07 or 10. Okay, so my take on it, I could be wrong of course, is that we're in business, we hold our position at 124.20 and 123.90 and 123.70. If you wish to enter the position, you could do so about now. So right out this consolidation, your stop is right above 125, keep it 125.20. Okay, so the risk reward is about the risk is about 100 points. Okay, and you take target at 122. Some traders may wish to trade this intraday. It is very possible, but the move is now almost expired. But there is a possibility. There is a very mild possibility. That's why our stop is at that we could do a double top. Okay. Risk takers, of course, would consider that this is an A, B, C, that's an A, and that's a B. A, and now C is going to be an A, B, C. So what we do is we take that higher, that dip, and according to these projections, you'll see 124.6 and 124.9 and 124.4. It's a very, of course, risky entry, and I would not do it. Okay, because you could actually have an A, B, C, or an A, B, C, and then, also an A, B, and an A. Already expired. Like this is already an EB and that's an EBC. You cannot, you have to segregate in detail this area on down to the 5-minute chart, which is not even worth the effort of making the few pips faster. Okay, so it's better to stay with the short side. It's about moving down now. We have strong momentum on the 30 minutes. It's true, but we have not taken out the resistance. Okay, and this could actually be higher momentum and lower price and higher price on lower and negative momentum. So it shouldn't really bother us. Okay, we will know when we get positive momentum on the 4 hours, or consistently positive momentum on the 1 hour, that the trend has reversed, if it has reversed, and it doesn't look reversed because on the 4 hours it's not. We don't really need to see into things like that, okay? Alright, so to wrap that, this is the time to enter, short, according to our projections, when these were shown here, 124.20, 124.90, 123.90, and 123.70. Our stop becomes 125.20, better, safer than 125, and our target is 122, not 122.5. This is that level shown, 120. I would not go short intraday. I would stick to, I would not go long, I'm sorry, very sorry. About finished now. I would rather stick with the shorts. Alright, so that you finish the Euro-Yen. If you wish the Euro-Yen, you repeat it, and then if someone has a position regarding it, and you wish to have the full analysis repeated regarding the Euro-Yen, please just post to the moderator this requirement, and I will redo. If we move to the United States dollar again, we could take a few questions. There's one question regarding growth support 1,904, 1,982. There is no telling. You cannot really, not with me anyway. I cannot really pinpoint the support exactly. Okay, at what level it's going to be. You will need GAN studies to do that. All right, I'm sure you must have heard of him. We do consider that our entries, or according to our analysis, you're getting support anywhere between 1,900 and 1,887. Okay, 1,882 is a bit too low. Alright, but 887, you should see that. So, it is not possible, my opinion, of course, support at an exact level, because you get spikes. Alright, so you can see 1,887, 86, so it's better when you want to enter to just leave your entries by limits, or you test the levels by what you would call, you test the levels by micro entries or mini entries at these levels. Okay, don't go, I would not go, sorry, I would not go just to get the right shot. Okay, I would not go full entry like we expect to have a bounce at 1,890 and 1,887, right about this line. Okay, now I don't think it is correct or wise to I would put the 3 minutes here. No, there was always time to see the reversal and test this on a demo or test it by micro lots. I know that most probably the very strong chance that it's going to be bounced at this level. So I'll put micro lots here, entry, and when they fill, okay, the market reacts and starts going up again. Alright, when I'm confirmed that I already go into negativity, okay, and we have now positive momentum on the 15 minutes, then I know that this is a bounce out of that triangle, and I'll put in I will complete my size. If I'm going to do the 3 minutes, or I'm going to do the 4 minutes, or whatever, and I've only loaded, say, half a milli, alright, by 5 micro lots, then I will load 35 micro lots, a little higher, okay, instead of 1,800, I will put minutes all the way down to top of this point here, okay? That's even 1,887, 62 and 63. I will not put stops for minutes, okay? I will just test the levels, alright, all the way down. There will be a spike, I will take it, okay? And then when this is going up, you will know, I will know, you will know, we will all feel it, okay? Technically, should, and then you can, when you know a push, you can add full size. This is the right way to do it, and this is the way to make money in the business. You also have to respect the character of the CFD market. The CFD market is a hedger's market. It's not an equity market where so the equities and the issues. Okay, it's like many people are entering this market. The real function of the market is to hedge against your risk. So some people, when they're taking risk, they will liquidate the hedge quickly, immediately. Okay, so as to close the risk. And this is why you see a lot of spikes going on into the market, and the market is very volatile. And this is why it's on very high leverage to allow everyone to hedge his risk. This is the market look. This is one. This is a very important candle. It may look of no use, but this pin candle is $1,856. Of course, you're not going to wait there. Okay, you know that your stop is below that point. We rounded that up to 1,800. Okay, but technically speaking, the market can spike you there. Alright, that we have labeled 1 to 5 will give you 1,887 and 1,886, and so on. You leave your entries there, micros, and then on a market reversal, like the one, this could be a market reversal, we have to investigate. Okay, you begin to add size. Okay, you begin to add size. Like if you were thinking this is a 1, 2, 3, 4, 5, and you're now bouncing at the 1, you would then begin to add size. Okay, it's also, I think, I don't know how to say this, but it's very imperative, very important. So, you know, if you are in a company, they tell you have to change the way you're doing business. So we have to change the way we are treating the market and the way we are entering the market, while we are buying into the market and selling into the market. Okay, we are not going, we have to change the vision that we are going to buy a number, okay, which is 187. We are buying 11, okay, and we are buying this level with certain proportions, with testing proportions, and on confirmation. Okay, we're very sure of our buy. We're extremely sure of our buy, and we are not timid or afraid to say when we are not sure of that buy. Okay, so when we are not sure of that buy, we are testing the level, and we know how to protect our tests very well. If we're buying, you know, at specific level, we are keeping them under surveillance and observation, and we know what we will do if certain other levels price breaks below these levels. We can add on our purchases and go out on an average, okay, go out break even, okay, and we know that these levels, when tested, we know exactly where we will enter, put size when they prove positivity, okay. Change the way we're doing business with the market. Pinpoint entry is not the way, is not probably, I don't know, but it's not feasible to implement in successively, okay, in a correct manner, market-wise. Alright, so we move on to next issues and next. So for gold support 1904 looks like it could be a support actually, but that's just a matter of luck. I would still wait for confirmation, and like I'm saying, you buy using micros, alright, test the level when you know that you are confirmed, like what we did with the sterling, with the pound against the US dollar and the pound against the yen. So confirmed, you go into full size and you make good money. Okay, so hassle, there's no need to run after price and run after a specific entry point. Okay, so to answer your question, you could see 1904 and you could see of course 1987, that's my take on it. 82 could be a little low, but it could also be that. There's another question, what's the best point position for Euro US dollar? We're just about to deal. Okay, so let's take a look first at the United States dollar against the yen. Okay, so we're getting filled there too, I believe. We are short that. Alright, so this is the current market picture. We did that earlier. We expect the current correction to test the low here at 1 or even here, okay, and we believe, or there could be a possibility that such levels are very good to short if we see them. Like now we're seeing at A, B, and we believe C can take us all the way to 105.7, 105.8. Alright, we can even see 105.9. This would be very lucrative entries to take for this issue. Let's go to trade management first, and that's it right here. Okay, so on trade management, we are seeing the head and double shoulders, and we were expecting to see 105. This current correction here, 105.5. Alright, leg 3 has finished. We should be selling into 4 to terminate at the bottom of 1 or the bottom of I. Why is that entry important? If we sell 105.6, 105.5, 105.4, if we're even going to see 105.9, okay, and we manage to sell these, okay, then we are going down all the way to 97. There's potential to go all the way down to 97. And at 105.9, we have very small risk to take. You only have to take risk at 106. Risk at $2,300, you multiply, and the dollar will be down. This is the essential takeaway. So this is a very good entry to take. We're seeing now some kind of ending diagonal or even an inverted head and shoulder that should shoot up higher and fill us these entries. Okay, intraday traders could even, I know they love this, they could take a long here with very small shorts, but I would not do that for this level. So I'll not even talk about it. I would rather really short this, okay, on the potential that we all remember the main bias here. This is the election trade. It's supposed to be one of the most important trades of the year. US elections, the coming US elections will either see a Trump victory or a Biden victory, a landslide victory for Biden, or there's going to be contested results. If there are contested problems, and these are going to weigh on the dollar, and they are also going to weigh on the equity markets. So the last time we had this kind of problem during the credit crash, This impacted the equity markets, and the Federal Reserve had to fund purchases of equities to support the equity markets and the bond markets through other investment banks. They had to print a lot of dollars doing swap lines, and this brought down the dollar against the yen, resulting contestation of the election results and problems regarding a rise in corona numbers. Okay, we're going into the winter now. Then we're going to have a weak dollar because people are going to be going out of the equity market. The central bank will have to step in using investment banks. It was the last time this pennant broke down. It took us all the way to 75. We even have a larger pennant fractal here, which shows that this one and this pennant, these two fractals, are actually fractals of a larger, long, triangular fractal. So we should be prepared. Alright, so if we sell these values now, 5.8 and 9, we enter the elections already with something like 100 to 200 points of profit, because if this continues down from that level, we'll see why, but sure it will be bearish. Alright, so we will already have a buffer of 200 points or 150 points before election night, and we can ride all the way down to 90, alright, 96. Okay, these levels shown here. And you can make a ton of money and go and spend happy Christmas vacation. Okay, alright, so why is that bearish? Why is it going down as quickly? This is actually what is currently happening with the issue. This is the daily chart now, not a weekly chart. We have a head and shoulder pattern whose neckline has already broken lower, and there is a head and shoulder pattern. It's the moment. Okay, so this means that this neckline is currently about to break. We're now doing 105 points. We're just bouncing out of that neckline. That's 105.4. If we bounce until 105.8 and 105.9, we sell. We sell these because this is the right shoulder, and we're going down that neckline. And with the current problems going, or even fear of the coming election volatility, this is going down. Remember, the gold is going up because of this currently, or could break out because of this. So more than one even before the election. If we have any spike in corona numbers, the last time by the spike in corona numbers, we saw 101.2 level. Okay, so if we have both election volatility and spike in corona numbers, we have an inconclusive election, or fears of an inconclusive election, and spike. We have now current spike in corona numbers in Europe. The first level we're seeing is 102.5. Okay, and this is also going to 105.7 all the way up to the bottom of 1. Okay, you would not want to miss it, even if it doesn't work out, because if it doesn't work out, the risk is small pattern, and we're inside an ascending triangle. The first target is 104.2. This is to our trade management chart. The current market action, we would have expected to go up until 105.6, but there's no problem. This extends, of course. This Elliott structure has potential to extend all the way above 105.8. 105. Okay, so we'll move on to our next issue. That will be the euro dollar. Question regarding that. So it would seem that John Lagarde did a very good job today because the euro of course shot higher. We would still consider that a correction anyway. entry levels were actually 1.1770. The market is currently going 1. Of course, our labeling would have to change, or our labeling is not really correct. It looks like we have here with degree 5, degree 5 and 3, and that was our degree 1. Okay, so this is just what we're seeing. We're not going to get excited about. Okay, just do this and get rid of these two. Actually, a 3D view here, about 3D. Okay, so that's 1, 2, 3, 4, 5, 3, degree 5 in week 3. That is it. That's a long, extended, prolonged correction. 3. Sorry, a prolonged motive wave 3. And this is the current correction in the higher degree correction. And see that here should not overtake that point here. 1.18, 10 or 1. So what was the question? What is the best point position for euro dollar? Best point position for euro dollar would be to sell against 1.1805, 1.1804, 1.18. Alright, and you keep your stop at 1.1840, 1.1850. Alright, so let's do that again on the analysis. Let's go straight to trade management. That's it. That's trade management. If you do remember this chart, if you all remember it. Okay, so this was the chart that we were just looking at a while back, and we took down with 3, 5 right here, alright, and 1 went up here, okay. We were going to short the right shoulders, okay, and it seems right shoulders are going to do 1.18, like about. Alright, so we were planning to short actually 1.1750, 1.1740. These entries here are 1.1760, 1.1745, and 1.1740. Okay, so speculators drove the issue up because there was a press conference for the ECB president today. Alright, and instead of shorting 1.1750 and 1.1740, we now have an opportunity. 85. We could short 1.17, 85 and 8090 and all the way up to 1.18. Okay, give us better entry levels to short. Alright, we take our stop, of course, we had our stop here at 1.1850, remains the same. 50 remains the same. Only our entries are better. Our entries are much better, okay, because the risk becomes smaller between 1.18 and 1.1790 and 1.1850. Our target, of course, remains the same. Okay, we still expect the head and shoulder pattern. Alright, and our first target is 1.1650. This is right about here. 1.1656 at the. So the best entry points for euro dollar. Today are a sell position at 1.18 and 1.1790. Okay, and you're going to take profit at 1.1650 with a stop at 1.1850. Okay, we're selling here against 0.1. 0.1 here is, or the bottom of 1 is 1.1808. So of course, allowing for spreads, you can sell 1.15, 1.1790, 1790, stop above, of course, 118.30, which is 118.50. First target is 1.1650. That's my take on it, and I would use that as an entry for good sell. Ultimately, of course, we are spoke about that. You see the bottom of A here and terminate at 1.1430. Okay, so we still expect a spike lower. Alright, in wave 2. Okay, that's where we will begin to long. And very quick like this. Alright, they will put of course the fundamental breakout. If there's nothing new fundamental, nothing, this is of course an hourly chart, so it's not a very strong breakout. But if you were to see this with a higher degree, there would have to be a very strong fundamental breakout, or this is called the phony wave. When you read about Elliott, they will tell you B waves are phony waves. Wave B is a phony wave. Wave B is a correction. Alright? B wave related to that wave. It will correct very quickly, very fast, very quickly, because there are many stops. Alright? Especially about the 38.2 levels and so on. So it will correct very quickly and take out all the stops, alright? Because the order panel at the brokers are clear. There are so many orders at specific levels and they're easy to take out. Okay, so they call this the phony wave. This is the definition of wave B. Okay, wave C is a trending wave, either case, wave B is a phony wave. So they call it the phony wave, of course, so as not to be deceived and buy into it. By then it will be already expired. We have already finished. United States dollar against the Swiss franc. That must have done good profits today. Yes, okay, so. So we're actually short that issue and we bounced exactly at the bottom of one as anticipated. So there's one here and that's the bounce here, right? That's it right about here. We were going to short 91.50. I hope you did short that. Alright, we can't be doing 91. We can't be doing 91. Okay, so you would hold that if you were 89.50 or 90. Okay. You could of course take now the stop at least to entry. If you're not already into the position, you would take a closer stop to entry. It's perfectly alright, it's perfectly logical. But if you're not already into the position, I don't believe you should enter the position. You don't need now to enter the 5, alright, or about to do a 5, and the remaining profits are not much. Okay, and then we could still see a larger correction. back again to sell, back again to test 9150 limit. So you would not want to take that now, right, and cannot do this. Keep in mind that you expect the euro to start falling, and this is the mirror image of the euro, reverse image of the euro. So I would wait for a longer, deeper correction to get better fills. Okay. Remember that from the 4 hours we're seeing this, so we're seeing double shoulders right beside this head. Stay focused on them. This is the 1 day. Of course, I skipped the analysis. We did this several times, but we're setting 50% onto that wave here. And there's a head and double shoulders, and this is the neckline formation where we're about right now, 90. We want to close position. We think there's going to be a dip below the neckline, okay, gradually, and these shoulders should be of decreased height, and it's not really worth the risk. So you want to wait until there's a bounce out of the neckline, and when there's a bounce out of the neckline, then we are going to sell again 9180 and 9150 and we're going to retest that neckline the second time, which is evidently short around here. You could now expect, yes, of course, you could see, you could go all the way down to 90. $89.5 and $89.50. But entry at this point does not give you that kind of good risk reward, so it's best to stay, reserve your ammunition, like they say, reserve your money for correction higher to sell at least shoulder level. Right, if your shoulders are here, so we will then redo the position short, okay? And take profit at, of course, you could start taking profit at 90 or roll down to on a break of the current neckline, 89.5. Okay, so our last issue is oil. You're welcome, it's my pleasure. There's someone sending a thank you message. You're really welcome. It's my pleasure. So alright, so this is really frustrating issue now. Okay, like I've been always saying, it's very, very strongly supported, and people supporting this issue do not want to see it down. They act in a hectic manner. So I think whenever they see anything goes down, they just buy. This is why we can't even complete the head and shoulder position. You know, like we're having double head. Now we can't even see the right shoulder or the left shoulder. I mean, you can't even see the right shoulder. Of course, the problem also is oil because of the current corona outbreak in Europe, or fears of a second corona outbreak. This is why support is very strong. So we might as well abort. We were going to short. We were short these positions on an intraday basis, selling 40.50 and 40.80. So we will not short it anymore. All right, we stand down if you already short these levels. You try to get out of the short by leaving entry at by leaving your take profit at entry so that you go out at break even. Okay, so we will not short anymore oil. I expect we will be breaking out higher, alright, but we'll have to do a resegregation of that because we already have continuous momentum on the hourly chart. We appear to be about to break out higher. So our analysis will change now, but we will still have to put that into revision. But what we anticipated happening, or we believe our analysis will confirm by tomorrow, is that Elliott structure here. This is a emotive wave, what we call a higher degree emotive, that should send the market up. So we have a 1, 2, 3, 4, 5. Now we have an A, we have a B, we have a C, we have a D, we're going to have a D. Okay. We have a triangle. We have this kind of triangle here, and we will buy into that, we'll break out higher. We will still confirm that tomorrow. So to do more in-depth analysis, but this is probably what will be confirmed. So this is the triangle is staying higher. By 39.40 or 39.85, there's of course potential to see another test of 37.90 if this triangle breaks lower, but I doubt that will happen. We will not allow that. Okay, so we are seeing this could be a very protracted triangle, right? Like you have it, this is a weak A, then you have it a B, then and we are going back to buy 40.20, 40 or 39.90. Okay, your stops in that case would have to run down all the way to 36. We'd have to do a segregation of that, like I'm saying, but I don't believe we're going to see a larger triangle. We already have negative positive momentum on major triangles. And it is consistent, so we're not allowed to check. Okay, so we'll disregard the original analysis. Remember that we were expecting a retest of 38. We were expecting to beat test of that Elliott motive. Gold is going up because of, like we've been saying, there is going to be a very strong $1.8 trillion stimulus package that is expected to be issued by the US Senate, Democrats and President Trump. Only now the Congress Republicans are against it, and President Trump has of course his own leeway with them. So it's a matter of time before they issue this very mildly or very strong stimulus package. It's about 1.8 trillion, true, and that will weaken the dollar. Of course, weakens. It will revalue the price of gold, and gold is going up. That's why gold currently is holding up. All right. There's also the matter of corona. There is acceleration in corona numbers in Europe. There are fears that this will be a global second wave this winter. And of course, you go to safety by buying into gold. And the US elections. The already investors are beginning to close the long out of bonds, or if you take money out of equities. If you're an investment bank or a hedge management house, you would liquidate these positions before elections. There's going to be a lot of volatility. You cannot bear to see this kind of volatility go against you, and you want to be safe. So you take out the money and you park it. Some yields of long-term bonds are even negative. So you would put that in gold. You buy liquid gold, bullion gold, solid gold, or you would put it in paper gold like CFDs. And if they go up, fine, then you're making money. If they don't go up, at least you are hedged, you're parked. And that's why it can go up fundamentally will go up anytime before the election or during the election or before the election. But we will not chase the market. We stay to buy, like we're saying, we've seen. And that wave is right about here, 1,890 and 1,887. We stick to our plan, original plan. That's it right here. We're buying this. We see 1,885, 1,800, all the way down, even if you wish, like we just checked it out, 1,877, 1,800. Go out at 1,950. Right? And then we wait again on buy at 1,890. We do not change the market. All this is speculation. We do not have a confirmation. We will know when gold has broken out. Believe me, we will know in due time and in due course. And we'll buy higher, maybe 1,930. But by then, there will be strong, vibrant trend, and no, we will not take risk. That's my take on it. In a huge, consolidation environment. But we know that gold is going up. So we can afford to start buying entries, micro or minis. 1,809. Come park money there, like they say. Or at the PL, even if it is negative, you go down to 1,860, will be minimal, very small. And we know fundamentally that gold is going up. Alright, so this brings us to the end of our analysis. If you have any questions or any issues that you would want repeated, just please send them over to the moderator and we can still make time to repeat. Keep in mind the issue regarding the sterling dollar and the sterling currency is going up now across the board. on evaluation that there will no longer be problems with coronavirus outbreak this winter and regular problems at the same time. Okay, so they will resolve the impasse in Brexit, and this is impacting the sterling highly. Okay, so there's a question regarding nickel. We can do that. Alright, so this is what we're saying with nickel. Okay, this is the Dow Jones Commodity Index for nickel. Okay, so the supply-demand price trend or the supply-demand cycle is actually showing this sine waves. Alright, and we are currently in what right shoulder of equivalent sine waves here. This sine wave should equate with that one. Okay, we have the momentum to go with for it on the daily, even though we're seeing a divergence, and on the 4 hours and the 1 hour. This is the 1 hour, I believe that's the 1 hour. Okay, so we will be buying into that short term. Alright, so for short termers, we would need to, segregate that wave, alright, and take an entry into it, all the way up to, we actually have to wave counts. This fundamentally has the potential to see the same high as the last high made, or terminate just below the wave 1 bottom here, or wave 1 bottom. Now, we have 2 counts. We have a primary count and an alternate count. The primary count is the one that is shown in yellow. That's just 1, 2, 3, 4, 5, which means that you could correct the whole wave, 5-wave structure, okay, all the way up to C here, which is something like 430. Why would nickel go up that high? Industrial-wise, of course, we have contraction in activity, but if gold is going to be going up, then all commodities, you would not put it past even nickel to go up, alright, and we know that gold will respond to right now. So we would want to get invested long into that until we see termination, alright, on the daily momentum, negativity on the daily or 4 hours momentum. Then we will know that it has terminated and we will go short, sell into the right shoulder. Now, we know the points of termination technically should be below the bottom of 1 here. Okay, like we said, this is the primary wave, alright, or the bottom of 1 white, alright, 1 in white. So that means that we could consider to start shorting at 366, 67, or 383, okay, or even if we go higher, 420. Now, of course, we will not short in any case unless we have the right momentum to go with the hour or 1 hour chart. This is the daily chart. Okay, so for the time being, we would long that wave, right, the current uptrend here, and swing term wise or long term wise, we would consider to short any one of these 3 levels. Okay, so these short levels are shown here, 370. Okay, that's on the monthly pivot, and this is on the weekly pivot. You would not consider shorts, like I'm saying, until this uptrend has expired, because this actually, what you're looking at is not the chart. What you're looking at is a plot, demand-supply plot for the commodity. Okay, so this is currently under demand for some fundamental reasons that we cannot really on being in a pandemic. Alright, and industrial productivity is down, but you could probably guess that manufacturers are stockpiling on the commodity, so there are many reasons for the price to go up. The most prominent of which is that If gold is going up, all the CRB index will be going up. CRB is a commodity-based index, will be going up. Alright, so we would not consider short until we see nation of momentum or negativity of momentum. We can only consider that the problem that 387 and 366. That's why we will take our our long targets at these levels. Okay, so short term or swing trade wise, we will buy into that uptrending wave here. This is the most right in that uptrending cycle, and this has been segregated to give a 1, 2, and that is 3, 5. We expect a retest of the top of 1. This is the best range the market will give us. Okay, and then we will be on our way again to do 5 at 368. This is 127%, or higher 372 and 387 shown here. So 368, that's that level here, fluctuation high for the 172, that's that level here, fluctuation high for the silver. At all cases, alright, we would both put along the target if gold goes up. And we would buy 338 to 342. These are these levels here on the index, 342 to 333. Average is 340, stop is 325. Down here, right below the bottom of 2. This is the 1, 2, and that is 3. 4 should test above the top of local 1 here or ground 1. Okay, that's why we're buying this book. Okay, alright. Our target is 370 in between the 368 and 372. Okay, and that's our swing trade. Now these levels may not even be seen if gold goes up quickly, which was commodities. Alright, and in that case we would move to a shorter time frame. We have a bullish translation cycle line on the 15 minutes. Alright, the arrows are not shown here on the momentum plot. Okay, but we believe that the market should test this cycle translation line at the most. It will not go below it. This means that these are the levels that we will be seeing. We will also again in 3-5, like we've been saying, and we should not go below that point on the 15 minutes. Alright, ideally we should test 350 and 352. Alright, that of course gives us much finer entries. We can fine tune our entries to 352. Our stop is 340, right below this page. Remember, we're in 4.5 over 3. So we would expect the coming correction to take us to these levels. Alright, 350 and 352. We're going again to 368 and probably 372. We target here 364. These are the fifth projections. But I believe we would see 368 and 66. These levels that are shown here, that's 366, that's 352, and that's 350. Alright, okay. These are the levels that will probably be seen if you're keen to get into the commodity. If you would rather be in gold or another commodity, then you could use of course the swing trading entries. Alright, these may be seen and may not be seen. May be filled or may not be filled. It depends on the correction of other metals, especially gold. That's my take on it. So if you have other questions or issues that you wish repeated, just post them all with the moderator, and we could still make time for that release, right? So okay, so if there will be nothing else, then I think that we'll conclude our analysis. Yes. Okay. So remember to take note of the bullish trend that's currently going. Alright, this is a confirmed entry, I believe, and we could go all the way up to 132.50 and 132 and even 133 and 132. Alright, and also the dollar yen. It's very, I would think it could be quite important to take those in the current levels going on. Alright, so I wish you all a very, very, very profitable week. Okay, and all the best trading today. It was great having you all, and we look forward to having you with us tomorrow. All the very best and take care. Bye.
ਆਹੋ